Good afternoon and a warm welcome to the Emerging Trends in 2013 webinar presented by Infrastructure Journal in partnership with KPMG. This is John Jorsted and I am the editor of Infrastructure Journal. Today's production takes a look back at 2012, which was a challenging year in the market, with a view to the future and the trends that are changing world infrastructure. KPMG's latest edition of Foresight, which bears the same name as this broadcast, I said today's discussion will provide our listeners with a bit of reality and pragmatism, so that there are a few problems out there that need to be addressed. However, I ask that there is optimism for the future. We're going to see where the global market for infrastructure is, how it got there, and more importantly, where it's going. This is not only for the professionals that work in this market, but also for the government, taxpayers, and all the end users of global infrastructure. Now, I could go on and preach about the importance of infrastructure, its economic impact, and the foundation it provides for growth, but I have a whole choir of KPMG's infra leaders present today and sing that hymn for me. So let me go ahead and introduce our guests for today. Lead a global business of infrastructure professionals, which advise infrastructure organizations in more than 130 countries in the past year. He leads KPMG's network of infrastructure professionals across its member firms worldwide. He has more than 20 years of experience in transport and infrastructure and has provided a wide range of advice about infrastructure development to public and private sector clients. This includes serving as advisor to governments in both developed and emerging countries. Finally, he has provided strategic advice to infrastructure owners, operators, and investors on which to the market. Also, this is James Stewart, the chairman of KPMG's Global Infrastructure Practice. Several of our listeners may know James as the face of UK infrastructure, and prior to joining KPMG as the chief executive of Infrastructure UK, which in this role he oversaw the government's long planning and delivery of infrastructure projects. Notably, in 2010, he played a lead role in producing the UK's first infrastructure plan. Prior to UK, James successfully led the operations at Partnerships UK for 10 years and instrumental in establishing many of the UK's most influential and sustainable infrastructure delivery partnerships. But certainly not least, my American, Stephen Beattie. Steve also offers over 20 years of experience with KPMG and well recognized as an expert in public infrastructure projects. He has many transactions and advised both public and the private sector clients extensively in privatization strategy, transportation planning, PD policy, development, and project fencing. So, gentlemen, welcome to our humble little studio. Thank you.
Very impressive.
It's better than what we had.
Yes.
So, dive right into the discussion. I would like to remind listeners that this is an open forum, and we invite your questions and to answer James' question from before. Yes, it's on the record, James. So, if at any point the listeners would like to ask our panel a question, they may do so using the text box in the control on the right-hand side of the screen. Write and send your questions using the box at the bottom, and we will try to inject these into the area as time allows. Forward, what today is about. Let's step in a little bit by looking back at 2012. IJ unpublished full-year project finance review put the investment of global infrastructure, project finance into global infrastructure at $182 billion. To put that into perspective, 2009, which was another difficult year, coming out of the global financial crisis, the volume then was 184, so $2 billion higher than last year. So let me just, kick this off with Nick. Back at 2012, summarize the major trends and issues that affected the infrastructure marketplace and led to that sort of decrease in activity.
I think coming out of 2012, coming into 2013, a transition between two years. We've obviously been through a period, and 2012 was no exception, of certainty, governments under pressure, pipelines, priorities, political priorities winning us over long-term needs, but are shifting into a much more optimistic, upbeat phase. And from a KPMG point of view, last year was a record year, so another record year for us. The last 3 years, we had the most activity in markets like the US, Australia, Brazil and India. Looking forward to 2013 and beyond, we're shifting into seeing continued growth in US, Brazil, India, Australia perhaps topping out, but also exciting prospects in places like Africa and Southeast Asia, and in parts of Europe as well, coming back. So the definition of what the infrastructure market is brought out as well. I'm sure we'll get into that.
That's a good point. So I was going to raise that issue. I mean, when I was talking about the IJ data, that was purely project finance, and really project finance, not the whole infrastructure marketplace. And so when you guys say that you had a bad year in 2012, clearly that's beyond that's beyond the project finance market and in the wider space. So maybe Steve, maybe you could explain a little bit about that.
I think what happened to our business is the years had been largely, our energies had been consumed with transactions. We had a significant amount of capacity and focused on the planning process and getting projects from the gleam in the eye of a public servant or a private operator through the planning process, so that it became ready, not necessarily to transact, but ready to bring forward to the public and to stakeholders. The next step will be that consultation process. And as we look at it, the last 3 or 4 years has really focused people on the planning process as distinct from the transacting process. And the projects you'll see that come out over the next 2, 3, 4, 5 years are actually projects that are much more ready for consumption, ready for transactions, than the ones in the previous 4 or 5 years.
So that gives you quite an interesting perspective on pipeline coming forward.
Just to add that I think if you look at it from an asset owner or even an asset developer perspective, then quite frustration about the ability of governments to bring projects to the pipeline. We're going to talk about that in a minute, I think. But what that has forced asset owners, asset developers to do is to focus on how to improve their returns. So they're absolutely focusing on their existing asset portfolio, thinking about asset management, thinking about taking costs out of projects, thinking about improving the way they construct assets, and emerging trend, we're seeing therefore a broadening of the kind of activity happening in this market.
We got our first question from one of the listeners, and I think this one, Steve, being that you're based in Canada and Canadian, I think it's probably maybe best for you. Do you feel that the market exists in Canada? That's a little bit surprising question to me, because I've thought that the Canadian market is really one of the real trendsetters in the world at the moment.
The Canadian market is large, has been categorized by the province of Ontario having operational capability and a long pipeline of projects. Now, as we go through governmental change, or at least elections in both British Columbia and Ontario, there is some uncertainty. But it hasn't changed. The projects have changed. And I think ultimately provinces will begin to come forward. The main thing is that the Canadian federal government years ago decided that it needed to be part of the process as well and develop PPP Canada. I think that's another important piece. The other here is that if you look around the world in the secondary market, the Canadian pension plans are absolutely dominant in terms of second market asset acquisition. So the market really does exist and will continue to be buoyant. There is a little bit of political uncertainty as we see today, but the sense is that the market will evolve and will continue to evolve, but evolve in a healthy and very conducive to public-private partnership manner.
I was just going to say governments around the world can learn a lot from Canada as well. Infrastructure Ontario, British Columbia, the folks set up there, world class.
Now, the point that you made about the pension funds, it seems like the Canadian pension funds have really, they've got almost the Australian pension funds. A lot of other funds around the world are kind of looking at these two groups and saying, something we should be doing, or how can we potentially be.
Increasingly, what we're seeing is pension plans at the market. And as Leach, who is now the chief executive, who was the head of investments, says he looks at infrastructure investments as return bonds on steroids, and he describes it that way. What he's saying is that there is some upside, there is some growth that helps them and be able to address their long-term pension funding needs, which a number of other pension funds are starting to discover is a very powerful tool, something that not only their employees like, but they actually prove out to be quite successful investments directly.
I want to transition then into the next slide, which is discusses specifically the pipeline vacuum, because I think this is an important from 2012, which was the lack of a pipeline. Could you kind of why there was a pipeline, or punt the question to Steve in 2012?
I'll give the flip answer, which is what happened in why the pipeline was so narrow and thin in 2012 was 2008, 2009, and 2010 and 2011. The real challenge that people faced was absolute tear in the marketplace. Get the projects that you have on the books done, or as many of them as possible done. But you saw a large-scale interruption in financing in 2008 that did put a lot of investors on the sidelines, that put projects in jeopardy. And there was that terror that made its way through the system. Having said that, there was a shift during the same period from what I'll call infrastructure to economic infrastructure. And there weren't as many economic infrastructure projects that were ready for consumption. And what we've seen since is a real focus on getting projects ready and public ready.
Just to pick up a point, to me, if you look at the development pipeline is very healthy. In fact, I was talking to a contractor the other day who said our order book, well, our potential order book is as big as it's ever been. The problem is, wherever you go in the world, are having enormous difficulty in bringing these projects to a stage where the private sector is able to tender, so that they get stuck in this development phase. And I think the reasons for that are funding, I think a nervousness on government about how they're going to afford to pay for these, where the money is going to come from to pay for them. Definitely in some jurisdictions, planning, and if you take something like India, the bureaucracy around planning decisions. The UK, that's a constant refrain. Quite simply, the capacity of the public sector to develop these projects and have the resources and the right skills and expertise to do that. And again, wherever in the world, the teams that are responsible for developing these projects from a public sector point of view are woefully thin, heavily reliant on multilateral support, which is never going to be the long-term answer.
Quick question: how much of an impact did the ozone crisis on infrastructure in 2012, and in terms of maybe even just the European pipeline? Because that was a around here anyway for last year, was that it was going to be very difficult to push projects through in sort of the in the Eurozone because of this ongoing uncertainty created by the political side.
I think strangely, I think not as an impact as everyone might like to make out. I mean, there are very, very few deals that have happened because of financing, and the reality is governments have responded to financing issues. I mean, so you'll see a lot of government support coming in for financing, whether it's, as I say, in Europe, with France and the UK particularly offering the guarantee scheme, and the developing economies like Brazil and India, where, to be honest, the state banks or the federal banks will provide the majority of the money. So I think in a European context, the Eurozone crisis itself has not the pipeline significantly.
Yeah, I think James is right. It's less about financing, more about funding the envelope. And if governments around the world can sort out the funding envelope by cutting through some of the policy haze that, for example, you can see in the UK at the moment, and secondly, getting into an honest debate with the public infrastructure is going to cost and how much it's going to be paid for. That affordability envelope then enables public and private to have a sensible dialogue that gives you clarity on pipeline and enables you to bring in decent project management, and then things like private finance, pension funds, planning systems fall into place beyond that.
I mean, just to give a macro point on this, I think even to these projects that we're trying to develop in infrastructure, they are difficult and complex and they require political leadership. And I think there is absolutely no doubt that the political leadership has been distracted by challenges that arise from the Eurozone. And perhaps some of these projects haven't had political leadership behind them, which has meant that they've got stuck in the development process.
Strong leadership, strong delivery teams, and governments generalising. Structure Ontario, as mentioned earlier, would be a good addition to that. Seeing a premium on delivery skills. And then the third element is just strong communication, explaining to the public, the stakeholders, where a project needs to happen.
Nick, that's a very good point. I think the thing that we are at the beginning of the real dialogue about affordability between public sector and developers. And I think what we will see is, and we're seeing it now, unfortunately, America's going through an immense amount of pain, or is in the process of inflicting itself with a rather nasty wound. The discussion about how much and we receive the public sector or in terms of public goods, I think that discussion is going to start, and I don't think it's going to stop for quite a long time. I mean, it's very healthy.
And this is because short-term agendas are still winning us over a long, independent view of infrastructure needs.
I think the long-term view is quite difficult. I mean, even within the UK experience, James, you lived through this, the change of government. You know, happens, that's democracy, and that's and there's a risk that comes with whatever the current government is doing might not be what the next government will do.
I mean, we were talking about a project in Mongolia this morning, which is a major project which we are performing. We have billions of dollars into the development and faced with an upcoming election in Mongolia, and a project of that importance of the country is always going to have political risk attached to it. And I think what we're alluding to here is the issue of political risk, and there's no doubt about it as an emerging trend. Political risk in the world has gone up significantly. And when investors or developers are looking at where they should spend their time, invest their money, they are looking very at political risk. And because the end of the day, infrastructure is a long-term game, whether you're in the development stage or the operational phase. And if the government of the country change the rules at some point, that will impact on returns.
One of the corollaries to my earlier comment about the real discussion about users and who pays and transparency is that much of this is quite unsettling and unnerving to more traditional investors in the marketplace. And there is political risk, and there is also political discussion and public discussion about the merits of a project or the demerits of a project. And that's one of the things that the investor crowd will need to really learn how to understand and interpret. Because one could conclude that the world has gone crazy, or could conclude that the family's having a debate about what it should do. I think it's more the latter than the former. Easy to conclude not the risk has gone up, but that the world has gone insane.
Structure plans varies around the world too. And take a country like South Africa, which is a very good time at the moment. In fact, based on a very sound 30-year plan that gives the market confidence and clarity about the pipeline.
But the interesting, the public struggles to understand why and what kind of infrastructure a country should invest in is a political decision, and why different governments take different views. Whether it's you should build a high-speed rail line, which would be example in the US, or in the country we're sitting in today, which is London, about airport capacity and Heathrow and all the rest of it. Why do different political parties differ so often in their decisions? And I don't think the public understand that. I'm not sure. There is
really good reason for it.
Airports, high-speed rail, water, roads, ER, nuclear, renewables. In the UK, this is the sort of profiles I was referring to earlier. Until you sort of work your way through that, public engagement as to why something like Crossrail, on the other hand, or the Olympics, people understand why it's needed and are generally very supportive of it. And that's why it's a critical ingredient of a successful project. But if you cut through all this fuzz, you can't get clarity on funding, and without clarity on funding, you get clarity on pipeline, and without clarity on pipeline, you can't get decent project management. And in the meantime, skills, talking in the context here, are going as soon.
So it's an interesting, just sort of, follow up on that. One of my reporters sent to me this morning about a transcript from a debate happening in New Zealand around a PPP road project. The negative view in this particular project was from a Green Party member. He was using, this how, where you take session payments over the life of the project and calculate that out, and why are we spending all this money? And then, the person promoting this particular project said, look, when we were discussing a PPP for a train, because we're all for it. Now we're discussing it for a road, and you're suddenly against it. So I mean, there's a lot of political maneuvering that happens there. I want to just steer this back to what happened in 2013 for us to see pipeline returns, and once the pipeline return, what kind of projects can we expect to see? So there's a question from the audience about clarifying what is economic infrastructure and what is, social structure, maybe.
Infrastructure, as infrastructure is schools, hospitals, libraries, stadia. Economic infrastructure is transport, rail, airports, ports. It's energy, water, but also increasingly digital infrastructure as well. Infrastructure is steadily overtaking our lives, but still somehow both in the planning phase and in our minds sits slightly apart from cases of infrastructure.
A couple of things that I think we're going to see is a move. There was a radical shift from 2008 to present towards economic infrastructure, a real focus on it, and we're seeing the initial bits and pieces of social infrastructure. The interesting discussion is it's moved from, in many cases, what America they referred to as shovel-ready projects, which were how I move forward, maintenance expenditures, things are small enough and quick enough to get out the door. What we're seeing now is new projects. The capacity is being used up in any of the existing systems. And real discussion around where we want society to be, whether that be Mexico, it wants to look at Colonet, the big port just south of San Diego, or whether it be a discussion in one of the Caribbean islands around the infrastructure program and what it should be. The interesting thing is that these national infrastructure programs allow that national debate to occur. In the absence of it, you can have exactly what went on in New Zealand.
And linking to that, if you talk about where you might come from, you've projects, broadly, sources around the world, around the world, the urbanisation continues at a frightening rate, and then lots of transport infrastructure to connect those.
I think what we're really, in terms of what's going to happen in 2015, I think we're going to see people come to terms with where we are in the world, the need to invest, and the need to move forward. We have historically done quite a lot of talking about the need, and I think the fact that we need to move forward to begin to settle in on people and they're beginning to say, okay, I'm going to return immediately to where we were 5 years ago. We've gone with doing what was so important 5 years ago is probably still important for the economy, still important for the country. Let's get on with doing the things that we said we were going to do. The world changed, but it's still there.
Just, I mean, sorry, going back to the question, what needs to happen to make this pipeline I would make 2 points. Firstly, I think people need to be more realistic. So the reality is how we choose to procure a project, whether it's conventionally or through PPP, you pay for it. And out of projects in the development stage are simply unaffordable. There is no means to pay. Either the government hasn't got the money, the user charges aren't high enough to pay for it. So it's A, but B, from prioritization. The second thing that is an interesting emerging trend is we are seeing more unsolicited bids propositions coming out, and what that means in practice is governments are saying not have the capacity to develop these projects internally. Please, private sector, come to us with ideas, a listed bid, as to what projects you could build for us. And we're seeing it in the US, we're seeing it in Brazil, we're beginning to see that in India, Steve, other countries. I mean,
see it in Canada, but it then falls into the regularized process challenge. And what's happened is this government is now much more welcoming of those. You think back 15 years ago, the ones who were doing it 15 years ago were those who didn't trust their public servants to come up with good plans. Now, there's a willingness to entertain the discussion about what infrastructure needs we have. Back to this transparency, increased open public discussion about what's important. That's a huge trend, and I think it'll continue.
Public debate and not getting too bogged down in procurement processes. That means you can't have disinteresting ideas.
That's a good transition then to the next slide, which is about infrastructure growth markets. So, Steve, maybe you can, or Nick, why don't you kick off on this one? Where can we expect to see the most growth in 2013? And then Steve, you pick up on it.
Well, if I look at what we're doing in recent years and what we're planning to do in years, given that as advisors you'd expect us to be slightly ahead of the curve. If I go back 5 years, our business was to Europe, Eurocentric, and then balance was predominantly North America, a Canadian market, and a fast-growing US market. The US actually been our fastest-growing market for the last 5 years, by the way, and then a little bit of the rest of the world. Now it's more like 10% Europe, 30% North America and Australia, which is now a vast market for us, and the balance, the rest of the world, predominantly in places like Brazil, India, and a lot of activity in places like South Africa, Saudi Arabia. It's in North Asia. 3 years, I think it's going to be much more a third, third Europe, but possibly different markets in Europe. A third North America and Australia. America continuing to grow. Australia probably topping out, not because it's not a hugely exciting market, but there's a limit to what can happen in any one country. Growth in Brazil and India, but really exciting developments in Southeast Asia and the rest of Latin America too. Right up front, and when we're at broadening of markets, you've now been to more than 130 countries, which continue to stagger me. So there are many exciting markets coming online at the moment that may get the chance to talk about later.
I think again, back to the economic infrastructure, I think globally the demand for natural resources is going to produce significant mine and mine infrastructure all the way down rail to ports. I think that's going to be a very significant market. I think the United States, again, the sequestration debate, whatever we're going to call it, is passed, it's going to continue to grow because that debate about and public infrastructure is, and there is a consensus emerging, a bit like the consensus that has emerged in other places 10, 15, 20 years ago, let's say in New Zealand, where there was a broad consensus appeared around the role of government and the role of the private sector. I think a new one is emerging in the U.S. It isn't necessarily pretty as transitions occur, there's a genuine geologic shift occurring. That may take several years to really fully emerge, but what we're seeing is America discovering new ways to build it. And I think from a market's perspective, a spot as we move forward.
The thing I love about infrastructure is that over the last 20 years, infrastructure has taken over those sectors. So power 20 years ago would not have been considered part of infrastructure. Mining certainly wouldn't have been. But I think that the new one on the block is cities. Cities. I won't bore everyone with the statistics because I think everyone knows about the population shift into cities. But cities are going to become the engines of a lot of countries' growth. And making sure that there is the right infrastructure within a city, it's interconnected in the right way, it's planned in the right way, is the latest and probably the biggest challenge facing us and our clients right now.
What's interesting is that there are very different challenges that different types of cities in different countries face. You've got the big ancient cities of Asia, in particular India, where massive growth is occurring. A lot of planning has historically occurred. We have the large American cities, some of which are struggling with the populations and age infrastructure. Others, exact opposite, in growth, increased traffic. In America, interestingly, probably since the construction of the interstate highway system, and that's just a timing thing, not just the interstate highway system, Americans have dealt with an excess of capacity, and that excess has largely been used up, and we're seeing some real reckonings occurring as people say, wait a minute, I don't have enough road capacity, I don't have enough capacity in the air. How do I move people from Washington to Boston or from San Francisco to Los Angeles? Those are some interesting questions and things that have historically occurred. So these wonderful different challenges going on, and people trying to build cities where there were none before, and a different set of challenges. Those are very different mindsets, very different interaction with the population, but an immense amount of money. If this decade, or the decades, has been about social infrastructure and interurban, what we're talking about now is activities within cities, and I think that's a trend that we're going to see increasingly over the next decade.
And I said I think the markets are centres of people and centres of resources. In terms of urbanisation, yeah, that springs to mind as James is talking. In the time I've been working in infrastructure, the world population I think has grown by about 1.5 billion people. I speculate when finish working in infrastructure, but by the time most of us in this listening to this call shuffle off this mortal coil, a further 2 billion people around the world will be living in cities. As I said yesterday, infrastructure is sexy for the first time in 150 years. Well, I think that's the reason why, and why I think we should be optimistic that it will remain sexy for some time to come.
One slightly depressing fact is that the percentage of people living in below poverty line in slums is staying pretty constant at 40%, particularly in Asia. That's an Asian statistic. And, I mean, some would choose to call that the informal part of society, which I think is slightly missing the point. But one of the things we have to address from an infrastructure and from a social point of view is as this population grows in the city, how do we move more people to poverty, more wealth, and will create the means to actually pay for the infrastructure to support these bigger population bases.
We'll talk about sustainability. That's what.
With a few other questions, which I've so if you sent the question across and you haven't heard it asked yet, we have stashed a couple of the later on when we've got that topic. But there was a couple of questions from registered people. When they registered, they were invited to ask questions, and there's one I think that just follows up on what James just said. Do you have any opinions about hotspots in Asia for private sector transportation?
Yep. Transport corridors being built between India. So Thailand in particular is going to spend $70 billion on transport infrastructure in the next 7 years. Vietnam has big plans to lean down into in China, and then in the rest of Asia, Indonesia and the Philippines have big tolled programs. So this is all ultimately about shifting between, I mean, another example would be China, 50 airports in the next 5 years, and in the last 5 years as well. One spot I'd highlight in slightly from centres of people to centres of resources is Myanmar, which is only just opening up, but think about the potential there. 60 million people snug between China and India, and resources, and the potential that holds. All of another market, there's these M's, Mongolia, Myanmar, Mozambique. Mongolia, a country of only 3 million people, but incredibly resource rich, and using really interesting developments in infrastructure there, partly because you have a single mining project generating 30% of national GDP, so you have sort of public partnerships in a completely different font size to those we've been used to in mature markets where public nor private sector can afford to fail. And you've got all sorts of interesting themes around to attract to a country like Mongolia. One of the answers is to build social economic infrastructure and resilience, which I'm sure we'll come back to later, but supply chain issues in Mongolia, resilience issues, what happens if you have a sort of pandemic of some kind in a community that's generating 30% of national GDP. You've got technology issues, one of the highest tech in the world in tech environments. And back to cities again, and to Steve's point, population of Ulaanbaatar has doubled in the last 2 years. But in time, we're working to create entirely new cities to these minds. And as James says, these cities need to be sustainable places to live and attract talent, not just labour camps.
That follows true for the CIS countries as well, because that was another question from registered participant.
The problem is the issue in CIS is funding. So I not financing for funding. How do you pay for these projects? So I think we're going to see in CIS, we will see a predominance of related projects, pitfalls, a few toll roads. But I think where substantial government money is required, they're going to be challenging for the time being.
Anything consumer-based where there is an independent revenue stream, that's what you're going to see.
These things, whether you're planning cities or whether you're planning major resource developments and linkages of could be 1,000 kilometres from challenging for governments, particularly when you have sort of cross-border situations going on, but challenging developers to think holistically, whether it's in an urban context, thinking about congestion as well as about metros, as well as about housing, in a mining context, think about how do you make a business case for building a 1,000-kilometre railway.
Now, one impact on CIS is obviously the settlement, the infrastructure settlement in the European Union, and obviously the reduction is going to have an impact because a lot of those projects in that part of the are reliant on European grant to help them along. That's very recent news. So we'll just have to see what happens.
I'd just like to raise the B in the BRIC equation, because we talk about Asia, we talk about South Asia, we talk about China. The scale of what is being attempted in Brazil in terms of port, in terms of goods and people movement, is phenomenal. And for those that aren't aware, please have a look at Brazil. The country of Brazil will transform itself if it is successful in implementing this infrastructure over the next 10 years, and it will be a massively different place than it was 10 years ago. The world are that have been lit to allow the society to transform, and the government is really responding in kind.
Opening up really rapidly, isn't it?
Well, it's opening up. It's opening up quickly, and what we're seeing the government of Brazil reach out positively to the markets. In the discussion around financing, alternative sources of finance, I think it's a place we forget at our peril. I think it's going to be one of the real hot spots for the next decade.
I think they're in London actually as we speak to make some presentations about the topic.
I think it's going to be a very busy week.
Moving to what I think is probably really this goes back to something James alluded to, and I think is ultimately the core of our marketplace, which is affordability, because I think we all know what we want to afford. So as governments increasingly feel the pinch of infrastructure-related costs, what considerations are play or governments responding?
One of the things as we move from the time of plenty, excess capacity, into the time of scarcity, or at least a current time of scarcity, I think ultimately large aspects of our infrastructure system are either being free or relatively low cost. I think when you look at elements of infrastructure or elements of society where we've actually understood, learned how to pay, be that mobile phones, be that any of the consumer services, we've begun to have that discussion. I think assume that it's very difficult to toll a road. I think we're seeing on real live examples is people are willing to pay more in order to get more to get a quality service, not just more road, but a more predictable, shorter commute. I think we're beginning to see that, and I think that's part of this transparency discussion and honest debate around the merits of something. I think that's going to be incredibly important. The challenge is for government courage to have that debate and to have those discussions. Because it's really easy to say, I'm going to give you a free road or a free phone system or a free water system. Easy, and that's a way to get it and select. But the problem is when it comes time to pay, it's very discussion on their different people or have discussion. But that courage, you countries who've had it and had the discussion, and they made giant steps forward, quantum leaps in their capacity, in their ability to deliver service to the public, and in their economic competitiveness.
The interstate highway system in the United States would have been built with user charging in mind. I mean, because I'm asking this from the place. One of the things that I always thought was brilliant about the highways were funded really in the U.S. was that places where nobody lived, North Dakota, I came from, got thing. So we could grain and ship it off to the rest of it. I mean, the cost obviously benefited and came back another way. I mean, how do you put user charging into a place like that?
I think the real issue is you are a fishery of a system, and people think the interstate highway system being built without cost. Well, no, the cost was hidden, it was buried, but it was buried in the processing. Costs flowed through the highway trust fund. It wasn't that people didn't pay; it just wasn't obvious how they paid. And one of the things we're seeing increasingly is bring those two together. It's actually a method of payment that seems to be the biggest single obstacle. Physically taking money, chucking it into a bucket or handing it to someone, that seems to be the issue.
The modern day equivalent of interstate highways being built in many markets around the world on the back of tolls. But I'm going to say the modern day equivalent in many mature markets would be digital infrastructure and addressing issues of digital exclusion, and that is being done on the basis of user charging, though it's quite complicated. Coming back to another figure is public sector infrastructure owners focusing on making infrastructure more efficient, extending the lifespan and reducing costs over the lifespan as well, which plays to the technologies that people PPPs have developed in Chapter 1 of the history of PPPs over the last 15 years. And there are interesting trends at play. I was here the other day about US, where departments of transportation are focusing much more on asset management, and you have things like MAP 21, which I think stands for making actual progress in the 21st century or something. Moving ahead in the 21st
Either one
century.
would work.
But basically, the government saying if you want federal funding for roads below the interstate level, you have in place performance standards and risk standards that cover things like ride quality, safety, environmental measures, economic vitality, all sorts of things. So Southern chatting back to one example of initiatives that governments are taking. I think Canadians are doing something similar.
I think as we look at this, the other great thing here is that all of the costs in the United States in most cases and in many other jurisdictions, the hidden, bare, or ignored. One of the problems, and we're forever in San Francisco, you drive east until you can find your backyard. Sending people the right price signals to you. People have all of these implicit, buried, hidden costs. So instead of paying $2 or £2 to drive on a road that they're predictably in 12 minutes or 22 minutes or 42 minutes, instead you sit in your car fuming with your cooler, which contains your lunch, or your cups of coffee, which keep you awake. And you spend anywhere from 15 minutes to 4 hours somewhere. All costs from a societal perspective. We hear statistics about billions and hundreds of billions of dollars wasted in activity, productivity losses, digestion, all those things in the presence of a more appropriate and explicit price signal. Wow. To be made.
And technology is going to play a huge
I know. Just one other very quick comment. I think if we're talking about emerging trends, one of the things that's going to happen is user-fee mechanisms are going to have to get more sophisticated. Now, interestingly, we still see that in the US on the roads, and that's beginning to see elsewhere in the world now.
Like the managed lanes.
Well, but I will give you a much more example, but it tells me, which is if you're in a city who has running water but lives below the poverty line will pay the same for drinking water as somebody on the side of the city who's using a liter of water to fill up its swimming pool. And that is the issue politicians have to get to grips with. There has to be unsophisticated means of charging people, which takes into account place in society and all of that.
Someone living thousands of miles away in a considerably poorer environment will be paying still more for that litre of water, getting a lower quality.
Or in some places, nothing to get quality interruptible water. Yeah. And everybody wonders why disease is a problem in that country.
Correct.
More than one.
So we've got some work. We, the industry, everybody's got some work to do to make politicians to think on this a little bit easier.
Rounding in about 10 minutes left, I want to really touch on, there's a big one at the end of this piece, which is the role of government, and I want to, but before we get into the role of government, I think this was alluded to earlier, and I think, Nick, you can probably, resilience planning, touch on the idea of protecting valuable assets from the impact of disasters. Obviously, you know, in your report, I think it mentions New York and Hong Kong and how one a week to sort itself out after being hit by a storm, and the other 24 hours.
Resilience is a huge issue. Trying to do it under time pressure. I was talking to the other day who's trying to build projects and run a substantial business in an environment where he's to regular flooding, which delays construction projects, which has knock-on effects, disrupts his supply chain, and causes power outages. So, yeah, resilience being a sort of day-to-day issue. You think in terms of extreme weather, and there's an increasing list of things you can rattle off and disasters. We've will recovery from Hurricane Sandy and Queensland as well. That requires massive effort. It requires government to work across governments, across government silos in very short order to get infrastructure built. There are many forms of resilience. Cyber being, I think, as yet, one we don't have a great talked about example. But I wonder how many years will go by before we're all reflecting on.
We have Hollywood, Die Hard series has always managed to give us something, and Die Hard 4 touched on that very.
Yes, indeed. Yes, indeed.
To me, one of the big challenges here, how much does a government spend on resilience? So, if you look in Chile at the moment, they are at considerable expense building a seawall to stop the next tsunami, which in that part of the world is pretty inevitable given the amount of earthquakes that take place. But that is pretty much easier now because there has already been a massive disaster.
I don't think you need that disaster like in Japan or in New Orleans.
Well, again, it's back to this, and I have a colleague, a city manager, who asks me to make sure that whenever I'm recommending a water system that I put at least part of it above ground, because people will revert if they see it. All infrastructure is taken for granted. What we have to do is think back to the floods that occurred and the disruption of the global supply chains in the sector with the floods in Thailand. I think it was 2 years ago. Level of destruction, not disruption, massive. What we focus on is big single point events. That ripple, the implications took years to recover from.
You mentioned Fukushima as well, and you can start with immense human. The ripples, as you put them, longer term though, are on the way governments behave, policy throughout the world towards nuclear change. You've got skills moving around the world as a result of that. Supply chains disrupted of the world, impact on markets around the world.
One of the things that we focused a lot on was the probability and the expected value. In other words, how much do I have to prepare for and how big is the issue? I think we're seeing a movement towards is if that unlikely event happens, what if the dikes are breached in New Orleans? What if the subway fills with water or the metro system fills with water in New York? Those are the things that I think particularly municipal governments and industries will need to consider increasingly is if this happens, how to recover. These are almost forgiven for the storm or the earthquake. It's 2 weeks, 2 months, 2 years that follow. I think really challenging.
I think that's a very good transition into our last slide and the last sort of piece of our conversation, which is around the increasing role of governments. And we've had a number of questions to this point, so maybe just start, James, and ask questions to you. So what kind of generic incentives do you actually see or would deem necessary in order to create a catalytic effect for infrastructure deals?
I think to that question, behind the question, I think that's the point that the infrastructure markets of today cannot rely to the same extent on the private sector to the markets that existed 3 or 5 years ago. And that is because the risk appetite of the private sector has certainly gone down, and there are complexities in the delivery of these projects than there were. And as a result, governments all over the world are having to take a leadership role in terms of delivery infrastructure, and particularly in the financing markets are having to take an interventionist role.
So that's a great lead into the next question, which also came from a listener, which was regarding PPP specific. What should or can governments do to facilitate long-term financing of projects?
I think the point to me is that we have to transition from where today to a situation where the private sector are more of the financing. Now, if you take the developed markets, UK, Australia, there's a situation where those markets have relied heavily on banks to provide, private sector banks to provide financing, and those banks can no longer lend long term and no longer have the capacity. So governments are having to step in, intervene, and to get institutions to provide that financing. If you take the developing markets, Brazil, in Southeast Asia, then you have a situation where multilaterals and state-owned banks, governments, are providing the majority of the financing. Those government balance sheets are becoming under increasing pressure, and the capacity of government, whether it be through their state-owned banks or development banks, is becoming more limited. And they also want to transition such that some of the funding, multilateral funding, is replaced with institutional financing. And so roads from different ends of the telescope lead to institutions. Now, in order to do that, you're going to have to intervene in the short term to de-risk these deals such that they are easier to invest in. The market builds such, hopefully in 5 years' time, we have a more experienced institutional investor, debt provider base. The market will flourish more on its own.
What's interesting, though, is that you see Europe going in one direction, you see Canada and the United States going in a different direction, and Australia going to a different direction still. And one of the issues is that they're responding to individual capital markets issues. It's not whether that will ultimately converge again, or whether the different markets and the different profiles will persist.
So there was a question in registered participants: is how will PF2 influence PPP models in Australia and Canada? And for those who don't know, PF2 is basically the UK government's new private finance model. And James, we actually had a conversation with some other people not long ago about this very topic, and PF2 was not really the thing that I came out of that with. It was the UK guarantee scheme was the other topic.
I think that, well, but consistently, the PPP contract is the same. Now PF2 has some tweaks in it, so there's a small amount of public sector equity in it. But frankly, the contract, when achieved, responding to an output specification, long-term availability or performance-based payments, that is pretty similar around the world. What we're beginning to see is great differences in policy in terms of how the finance is sorted out. So the UK has its UK guarantee scheme, encouraging the long-term debt market to continue. Australia, at the other end of the spectrum, if you like, is saying banks lend short-term and will leave the refinancing risk in the deal. Very, very different approach, but the underlying contract that those different financing mechanisms are supporting is pretty similar.
And I don't suppose any of us here are willing to say which one we think is wrong. I think we're all probably saying there's different tools for different.
They're all right. They all belong to the specific circumstances.
One thing I would say is, it is much more feasible for institutions to get involved in PPP once it becomes operational, because the risk profile of the deals at that stage is appropriate for institutions like. For the challenge is much more, what do we do for those first 3 years of the contract's life?
There's the question, what can Australia and Canada learn from PF2? Okay, I just made the observation as well, but we can learn an awful lot from Canada and Australia as well. Just quickly, conscious what's bubbling through my head listening to this bit of government in both markets around the world. So really having to step up, often lacking capabilities, which create delays, and you've got corruption issues. But I step up in the case of some of these mega projects to really represent national interests. So big challenges for governments around the world. Secondly, just reflecting back on all the active that governments are having to take a lead around the world. We talked about resilience, technology, financing, policy and regulation, bills, increasing global competition, interdependencies that we've only alluded to, setting you up here for another call in due course, and climate change. And last thought was just globally, governments is pushing forward on long-term needs that they know are a priority, but they're always lapsing towards short-term electoral cycles. And unless we want to abandon democracy worldwide, the answers seem to be in transparency and more on infrastructure around the world.
I think a very good place to end on, actually. So it's 3 o'clock by my watch, which means that we've run out of time. So that concludes our presentation today. I would like to thank my 3 distinguished guests from KPMG's Global Infrastructure Practice, Nick Chisholm, James Stewart from CBC. Thank you, guys. And thank you, and on behalf of everyone that worked on this webinar, both KPMG and Infrastructure Journal, I'd like to thank all for listening. So enjoy the rest of your day.